Hello, everybody. This is Money Mentor Dan. I am here with Keemie. I've been mentoring her for the past few months, and she's going to go ahead and speak about her experience with financial coaching. You can go ahead and take it away, Keemie.
My name is Keemie, and I'm going to present to you guys my financial coaching experience. So I'm going to share my PowerPoint screen. We can get started. So a little bit about me. I grew up in Columbia, Maryland. I am 23 years old. I have been at Johns Hopkins for 2 years now, and I am an applied mathematician where I received my associate, bachelor's, and master's degree in applied math. So that's just a little bit about me and my background and what I do before we get into the rest of this PowerPoint. Okay, so background specific to my personal financial journey. Starting this experience, I just needed to think about the state that I was at a couple months ago when we started. So this is just a little bit of that. So the first point is I accumulated debt from grad school, which roughly is around 55K. I bought a new car in July of 2023, which roughly put me at 45K. And then at the point of when we started the financial coaching journey, my savings were roughly about 10% of my annual gross salary. So with all of that being said, reflecting on my background and then reflecting on what I wanted to do moving forward, I established some goals. The first goal being to establish a realistic savings plan that will encourage healthy spending habits and help me pay off more of the debt that I previously mentioned. The second goal is to start my investing journey. So I'm a beginner in that, and I just wanted to learn a bit more about that. So the topics I'm going to be covering in this PowerPoint align with what I learned in my financial coaching journey. So I'm just going to be covering them as follows, going through my student loans, my car debt, the place where I started investing. We started at bonds. I'll get more into that later. Emergency fund, which I will explain more later, and then going through a spending plan specific to my groceries. So okay, let's go into the first point, which I'm just going to put my student and car loan debts together. So initially, when I started my financial coaching journey, I was trying to figure out the best way to pay off both loans efficiently. So key point that was made was to focus on paying off the loan with a higher interest rate, which makes more sense. So this means that I am going to make minimum payments on my student loans to prioritize my car loan. So this means obviously that my student loans have a lower interest rate and my car loan has a higher interest rate at the beginning of my financial journey. However, in just thinking about this, I think the beauty of this experience is it just kind of puts your mind in a good place where you start thinking about what are some other avenues that I could be taking. So just an avenue that I took independently, just being motivated from this experience, I decided to think, okay, what if I refinance my car loan? So I was able to refinance my car loan, reducing my interest rate by 3%. So this adjusted my strategy where my student loans now have the higher interest rate than my car loans. So I just adjusted my payment strategy. So I'm continuing to pay the minimum on my student loans and I'm paying more on my I adjusted the strategy, so I'm paying more on my student loans and less on my car loans since they switched. And I also got the guidance to submit an application for the Maryland Student Loan Forgiveness Program, which allows me to apply as many times as I want. And through that, I can also receive a deduction on my student loan debt, which is amazing. So that was my strategy and my journey going through this. where, again, I focused on paying off the loan with the higher interest rate, and I adjusted that accordingly to whatever interest rate was higher at the time. I was able to refinance my car loan, which was amazing and saved me so much money. And I was able to submit an application for the forgiveness program, which could potentially save me more money on my student loans. So, okay, so now connecting that to some key milestones and just savings, connecting that to numbers essentially. So the majority of my student loan debt will now be paid off by the end of this year, which is amazing. And the car loan will be paid fully off by next year. And so this new plan ultimately accelerated my payoff timeline, but at least 1 year for my student loan, and for over several years for my car loan. So overall, the estimated savings of everything that I've done is the scale of $10,000, and the estimated time saved together with my student loan and my car loan is around 2.5 years. So this means I can just get that time back and hopefully invest it to my savings, do whatever I think is best. So these are some of my milestones and savings that I made from the adjusted student and car loans plan. Okay. Now I'm going to be transitioning to another topic, which is bonds. So this is the start of my investment journey. Bonds is what we wanted to do is just use it for educational purposes by putting small amounts in there where I could learn different things. And I'm going to be covering that now, a little bit of what I learned throughout this experience. So just starting with the basics, I learned the difference between, an ETF and a mutual fund. So you can break that down into categories with the differences in trading, management style, minimal investment, fees, and the tax efficiency there. I learned about expense ratio, about S&P funds, which is key to knowing. And these are just annual fees that help to cover a fund's expense. And a really important point here is just minimizing the expense ratio is very key when investing. Another point that I learned is why it is bad to buy municipal bonds inside IRAs. Essentially, it just wastes the tax-free benefit that you're given with the Roth IRA, and it takes up limited space that could be better used by other investments. So I was able to put all this knowledge into application by choosing 3 bonds, and I'll be briefly covering those bonds that I chose. And again, I just put small investments into those bonds. It was really just an educational opportunity for me, something that I could track and be invested in, something that was, conservative, not too high risk. So it was great for me just to learn more. So the platform that I used to invest specific to this was SoFi. It's just a direct online bank, and it has other financial services. So this was the platform that I use also because that's where my Roth IRA sits. So the first one is the Vanguard Tax Exempt Bond, ETF, which is just a municipal bond, exchange traded fund. This is and I also got the opportunity to look into, okay, what is this bond? What does it mean? And what is it holding? So here I just learned that these are bonds issued by state and local governments to fund public projects. And it holds a wide range of investment grade municipal bonds from various sectors, just to help diversify that risk. So this is my first one. Going into the next one, GovT, which is the iShares US Treasury Bond ETF, Exchange Traded Fund. This tracks the ICE US Treasury Core Bond Index. and essentially just holds a mixture of different treasury bonds with different maturity levels, and it provides diverse exposure to different segments of the US Treasury market. So this again was another opportunity for me to look more into what is a specific bond, what is it giving me, and just more background information into it. And then the last bond I'll be covering is the Vanguard Long-Term Corporate Bond ETF, which just tracks the performance of the Bloomberg US 10 plus year corporate bond index. So this again was another opportunity for me to learn more. And this bond, it provides investors with exposures to a broad portfolio of US grade US investment grade corporate bonds that mature in 10 years or more. So again, more information that I was able to learn here, and something that I can keep checking up on even past my financial coaching journey. And it's just got me started in the world of investing, and I'll hopefully be able to look into other things on my own independently, but it was a really great kind of jump off point for me.
I'm going to jump in just for a moment. Keemie said this herself, but I just want to reiterate for anybody watching that we Keemie is not heavily invested in bonds. She spent a little while talking about them, but she is still dominantly in equities. This was simply an opportunity, as she said, for her to become educated on these things, which will become a larger part of her portfolio as she goes through her life. But we're not having her heavily in bonds right now.
Yes, that is correct. Exactly what Dan said. This was just an educational opportunity for me and a jump off point. And again, very small investments into these things. And it just opens up the door for me to learn more. So it's a great opportunity. Now I'm going to be going into the spending plan that we created. So my goal here was to create a grocery spending plan that minimized the costs and just encouraged mindful spending. So the first change was looking at what store am I purchasing my products from, and could I potentially be purchasing my products from a different store? Originally, when I first started, I was purchasing everything from Safeway. I found out that Aldi is a great alternative, and another alternative would be Walmart. So I explored both of those options here during this financial journey and completely made the shift. So I'm no longer shopping at Safeway. And from there, I created a spreadsheet where I laid out all of the products that I am buying from Safeway, all the products I would be buying from Aldi, and all the products I'd be buying from Walmart, and kind of looking at that comparison there. So that's on like a store level. Then I decided to take it down to each individual item and figure out what items could I be swapping out for other items that are more affordable. So for example, it could be as simple as paper towels to the protein bars that I eat, and not just looking at the money that I'm saving, but also looking at am I getting what I'm truly paying for from the product? For example, for my protein bars, looking at the nutritional value there, and I know I want to get the most that I can, like a good amount of protein, but I also want to minimize the sugars that I'm receiving there. So I was buying protein bars that were very high in sugar and were more expensive than the alternative, which was just like a Walmart brand protein bar, and that had the exact same amount of protein, but it had a lower sugar. So I ended up saving money there and my health. So little things like that definitely made a difference, and they definitely add up. So it's like I was saying, committing to using more store brands or whatever the most affordable product is. That could mean buying in bulk. That can mean something like for apples, where there are different types of apples, but certain apples are cheaper than others. So if you don't have a preference, why not just go with the cheapest option? Another thing that I was considering was I have specialty cat products I need to buy for my cats. So instead of getting that from third party vendors, if I get that straight from the seller, I also save money there. So Ultimately, by using a spreadsheet to compare products from Walmart, Aldi, and Safeway, I effectively learned to track my spending and just stay organized. And I was able to just maximize the amount of money that I could take with me instead of putting it all into my groceries. And the estimated savings annually from that is $1,100. And I'll be going more into the breakdowns for each of these components later on at the end of the PowerPoint. Okay. So now I'm going to shift into a commitment that I made during my financial journey was to read a book and share my thoughts and questions with Dan and just kind of take notes and hopefully I can apply these things. So the book that I decided to read is A Random Walk Down Wall Street. This book is based on the idea of a random walk where future steps or directions cannot be predicted based upon past actions. So I'm breaking this down in terms of just some of the key takeaways that I got from this book. The first is I learned about efficient market hypothesis, which argues that stock prices reflect all available information. So this is challenging any of my previous views on timing the market, and I was just able to learn more about this sort of idea. And yep, and the next that I want to get into is investment strategies. So one thing that this book highlighted was passive investing through index funds, which definitely as a beginner investor, it was great advice to hear. And I just learned about the benefits of low-cost diversified investments for long-term growth. So that's something I can definitely jump into using the advice of this book, and I'm excited to do that. The third thing, which I find really interesting, is just sort of the psychology behind all of this and how emotions and cognitive biases that we have can lead to poor investment decisions. So this just allows me to stay aware of my own sort of cognizant bias and emotions that I have. So when I'm making decisions, I can monitor that and make sure that I'm actually making the best decisions that I could be making for my financial situation. So those are 3 points. I have 3 more. Another point that I wanted to highlight is that was greatly highlighted in the book was the importance of a diversified portfolio, just reinforcing the idea to spread risk across different assets can protect against market volatility. Another point that I wanted to highlight was just looking at and emphasizing the long-term investment mindset. So instead of worrying about those short-term fluctuations, focusing on the long-term growth, so that's essentially what matters at the end of the day. And this feeds into my last point, which is that historical data, based on historical data that was presented in the book, is illustrated how unpredictable markets can be, which reinforces the previous idea of just having that long-term approach and being patient and being a strategic investor. So overall, I think this book is amazing for people who are just starting to learn some of these core ideas, who may be starting their investment journey or who may currently be investing. It's a great reminder or a great learning lesson for those who just want to learn a little bit more about investing and some of the psychology and also some of the kind of common sense knowledge that you can apply to it. So it was a great book for me to have and definitely applied well to the goals that I had in this financial coaching experience. Okay, so the next 2 topics that I'm going to be talking about are currently ongoing. So they're works in progress, but I'm really excited for both of these. The first one is a roommate. So at the beginning of this coaching experience, I communicated that I will be moving. And one of the first things that Dan told me was maybe consider the idea of having a roommate. And I was kind of teetering on it, not too sure about that. But honestly, looking at the math and looking at it compounding for me, looking at how that can contribute to the way that I pay off my debt and how I can pay it off sooner, that was a big motivating factor for me to say, you know what, let me just see what's out there. And I just decided to use different platforms that I had access to and see if I can find someone who's compatible with me. And I found someone, and we're almost there. And hopefully it will work out and I will be moving soon. So the estimated savings from that, including moving and including adding in that roommate component there, will be around $1,500 a month, which will be amazing. And it's gets me closer to my goals in terms of paying off debt, and also allows me to get to a place where I can start investing more than just right now. It's just I'm aggressively paying off that debt. And the next point that I wanted to make is for my emergency fund. So this goes into my debt strategy, the payment strategy for my debts, where I decided to just take a very aggressive approach. Like I said previously, focusing on the debt that has the higher interest rate, but also focusing on paying off my debt more than building up my savings. And that in the short term will allow me to pay off my debt. In the long term, it will allow me to put less time into paying off my debt and allow me to um, go back into building up my savings eventually, which is amazing. So something that we discuss is emergency fund that can be established with family, where I can call on them to provide support when I need it, if I need it. And it will allow me to, like I said, completely focus on paying off my debt entirely without setting funds aside for emergencies. So this is something that I'm still having ongoing talks with family and providing them with resources and having educated conversations with them about this. There are great resources available, so you can have these conversations with your family, and hopefully that will result in good news. So these are just some steps that haven't fully fleshed out yet, but they're still ongoing, and it's just part of the process. So with all of that being said, I wanted to kind of go over some just final takeaways that I learned in this financial coaching experience. The first being, and it was a really big one for me because it allowed me to rethink sort of the way that I organize spending in my mind. Having something down in a spreadsheet, having something down on paper allows you to question, why am I spending on this? Why am I making these decisions? And see where your money is actually going. And you'll definitely end up saving more in the end. So it also allows you to assess your needs and priorities and allocate your funds effectively. Looking at things I can recognize, maybe I don't need this, or maybe this is definitely a priority for me, and making sure that I'm getting the most out of that. So that was the first step. The second thing was just to embrace mindful spending, so making intentional purposes that align with my financial goals. So again, going back to what I previously said, there are certain things that are very much priority for me and other things that are not so much priority for me. So just kind of making sure that I am that my financial decisions are based on that. Utilizing my resources wisely. So a resource that I have is my family. So seeing if I can set up an emergency fund with them to help with my debt payment, and just utilizing the resources around me, or even utilizing resources to refinance my car was an option that I took. Prioritizing long-term goals. So staying committed to my long-term goals, even with the short-term challenges that I face. And this is something that's more of, it's less about money sometimes, and sometimes it's more about emotions. And this is one of those things for me where emotionally, I would rather, like, I don't know, take a trip or do something um super fun, but knowing that I have these long-term goals and I really want to stick to them and they're very important to me fundamentally, and not allowing sort of those short-term sort of pleasures or short-term things that pop up to get in the way of what I fundamentally want, which is those long-term financial goals. A key thing here and a big takeaway is investing in knowledge. So continuously educating myself about finances and investing. So reading a book like A Random Walk Down Wall Street. And I just love reading books about finances. So this is always the thing that I'm going to continuously be doing, but it's just great to stay educated on everything in terms of, like, when I invested in my bonds, it wasn't just like, okay, I invested in a bond. I didn't really think about it. It was like, what is this bond? What is it doing? What's happening? All of that, like, background information that I think a lot of people just kind of let float over their head. I really wanted to learn more about, and that's something that I will continue to take into my future initiatives. Seeking accountability was a really important thing here, whether that's through a financial coach, a friend, a family member. That's something I always want to do, is make sure that I continue to just find someone who can help me stay track on my goals and I can help them stay track on their goals, and we can kind of go back and forth in that. And the last thing is just be flexible and adjust. I think, changes happen in life, and being flexible to that, and allowing your finances to be flexible to that is really important. So that's just a general takeaway. And from that, I wanted just to talk about the overall estimated benefit from implementing all these lessons that I learned. And I'm just using the big kind of lessons throughout this journey. The first being was just creating that grocery spending plan, again, allowed me to be a more mindful spender, and to look at what I'm spending and maybe scale back a little bit in certain areas, or make different decisions with where I'm spending my money. So the monthly benefit that I achieved from this is $90. The annual benefit estimated is $1,100. And like I said, it's making decisions like purchasing in bulk, shopping at different stores, things of that nature. The next lesson learned was adjusting my debt plan. So again, paying off the loan with the higher interest rate, just thinking about what is the smarter way to pay off my loans, and then doing the math. I think with every decision, one thing that is key here is doing the math and seeing what that looks like. And when you can actually put something in numbers, it's a great motivating factor for you. So seeing that definitely helped put things into better perspective. And this is a one-time benefit of $10,000, which is absolutely incredible. And I also want to emphasize the time here. Time is such a big privilege. And the fact that I was able to take the timeline down by 2.5 years, over 2.5 years, is incredible. And that time I can better a lot to investing, and then I can get compound those investments, and those returns will be incredible in 20, 30, 40 years. The next lesson is with my roommate. So having a roommate and moving all together, the estimated monthly benefit from that will be $1,500, and the estimated annual benefit from that will be $18,000. So again, this is just reducing my rent and any shared expenses, which would be great. And the last thing that I wanted to highlight, which is just investing in knowledge, which is something that I will continuously be doing past this coaching session. And overall, I mean, that's priceless. I think committing yourself to continuously learning, um, there's no ceiling to that. I can go as far as I want, and it's education, I think, is probably the best resource here, and it's something that I'll always be utilizing when I go from A to B to C. So then breaking that down, or building that up into the total benefit, again, that one-time benefit that I received from adjusting my debt plan is estimated 10,000. The overall monthly benefit of everything, so the grocery and the roommate and moving, is 1,600 a month, and the estimated annual benefit that I receive every year just from creating that grocery plan and from moving and adding in that roommate will be 19,000, which is incredible. So ultimately, this is kind of, you can see this table and it gives you the benefit of all the lessons that I learned along the way, but in dollar amounts, which is very motivating. And it was overall great experience. And I think I just lastly wanted to thank Dan for his just being my financial coach and supporting me through this journey, giving me his expertise, encouragement, strategies, and overall just empowering me to take control of my financial decisions and make informed decisions that best support my financial goals. And it will definitely help me have a better, brighter financial future. And I'm really excited to see what that looks like 10, 20, 30 years down the line and to see those returns. So yeah, that's it. Thank you.
Okay, Keemie, very much appreciate you doing that presentation for everybody. As you can all see, Keemie is a very impressive young lady who has a very bright financial future ahead of her. And that was true even before coaching, I think, but especially even more so with that under her belt. And for that reason, I would encourage all of you, even if you don't think of yourself as an impressive young lady, I would encourage all of you to consider financial coaching yourself, because really the only thing you need is a genuine commitment to learning and to making the changes that need to happen, and you too can enjoy these same kinds of benefits in your life. All right, this is Money Mentor Dan, and we'll see you next time.